Hey guys, it's Will. Hopefully you're having a great day today. So the data center market is moving so fast that we got to go over the top three stocks for this week. Hopefully you guys enjoy. Let's get into it. So the first one we're going to go over here is has been surging and has been making more money. But are they keeping the money? Are they spending it correctly? They also have a narrowed net income. So that's good. But on top of that, they're also securing new contracts that will preserve them well into the next few years. In fact, some of these leases are 15-year leases that are said to be being already receivable, and they're already getting cash for these leases right now. So this is a very important key indicator, is that not only they're growing, not only the money's expected, they're going to be making more, but also that it's actually in their account. It's already making its way into their account. And that's, seeing it all the way through from a potential pick to, their catalyst driven to the catalyst has happened, but it hasn't yet been verified, to then the verification of the catalyst. That's actually where we just recently reached with APLD. Now there's three things we go into across any stock. We're going to be looking at the market. And in the first step of the market, just in general, data centers, spending is up big, not just from big tech like Apple, Google, and Amazon. Even some of the companies you wouldn't expect that maybe aren't as big in the data center market are jumping in the data center market, and that's definitely there. But then the second key of the real world usage, right now AI is everywhere. You see everybody starting to integrate more. We've even got a company, I can tell you the usage has been off the charts. We're going to actually be using it today, which is we use all of these models: Grok, OpenAI, Claude, Gemini, the premium models in one. And this is the Prophecy app, the Prophecy AI that our company uses. And I can tell you just by looking at the usage, I mean, I don't want to reveal any sensitive information here. Hopefully I do not. But you can just see by like weekly, 7,400 requests. This is just the last week or so. If you look, daily, I don't know, like we only have 100 users inside of our platform, and we're seeing, 1,400 requests sometimes per day. So very large usage across the AI markets. And this is just what I'm seeing internally in our company. That's just Grok. If we want to look at Claude, it's going to be, I don't know if I can really, yeah, I got to sign in. I don't want to show any sensitive info either, but, and hopefully we're good here. I don't think I did. But this is just like firsthand, I could tell you we're seeing it grow. So what does that mean? Well, someone's got to power all this AI usage. And these companies specialize in exactly that. So APLD has been building the data centers for large AI companies, including CoreWeave, which is up 11% today. INEN is up 10% today. That's our top two, by the way. And then number three that we're going to be covering today is CLSK. But there's some other ones like BLZE, like WULF, that are also building data centers. Or, for example, we're trading TSSI right now in our daily live trading session. We're up about $154 there. If you guys ever want to tune in at market open, it's the second link below to tune on in, see our entry, see our exits Monday through Friday. But this is the key, right? The first one, APLD, we see them now rocketing. We were expecting, we've been following them since $3 a share here, and we've seen them in this very consistent uptrending pattern since April 2025. And as they've considerably grown up to $40 a share back in October, and then sold down to about 17 before making their way back. And today we are right near that $40 price point. We were expecting them to hit this $40 level over the course of the next month or 31 days. Like that's what I was kind of expecting. And even inside of Stockmates, which again we just talked about the second link below, we had some earnings targets for this week that they had the data center infrastructure revenue growth. So they actually came in with an increase of $100 million, $120 million in revenue is what they came in with. They've run up their earnings, strong revenue beats, all those things. And we were expecting that and expecting them to jump up to $39 to $45 by the end of the week. They ended the week, and that was a very bullish target. They ended the week in those mid 30s, and they're continuing to roar. And so as they've made their way up to this $40 range, again, I was expecting 1 month, but they made it up here in just 14 days. So I don't say this to be like, you guys missed it, anybody like that. I know there's actually a lot of you guys that were able to capitalize on this. And then now some of you guys are saying, oh, do I buy now? I actually wouldn't advise any short-term traders in any instance right now that you go big on APLD in the short term, because there could be some pullbacks. You see this large increase, RSI MACD way overbought at the moment. You see them up to a previous resistance at $40 a share. You can see them in their greater trend here, at a level where they may get rejected. And when they get rejected, it's not small, right? We've seen them sell down from 40 to 30 in like a day. So, and that's big. So, but given that current level we're seeing around this $38, $40 range, the key is two things. Number one, psychologically, they're right at a resistance, and if they break out, $39 it's like a discount price. It's a good price point. They might see more breakouts, and that could definitely happen. But in the shorter term volatility, it's quite unpredictable. Now we do see some indication here from Prophecy AI that there's actually still some bullish momentum into the next few days, into the next week, and keeping momentum into the next year up to that $63 price point. So we may see that, and that is quite possible. We just see this steady surge. But once again, just having caution. I'm long term. I've been holding them since around $11 a share back here, somewhere in here. So we've been holding them a while, over a year now, or almost a year. And so it's a conservative play long term. But here's the thing, they're at $39 a share right now. They're going to most likely see more growth. We see them with Supermicro Computer, Nvidia, Dell, Intel building these data centers. They're really getting a lot of the construction done and fast. And they signed multiple deals going straight to the source here, not hype articles or anything like that. You can see that they have a $25 million funding round for the acquisition of a company for liquid cooling. But then you also had them raise money. They raised some money, but this is where it gets interesting. $5 billion AI factory lease. And then they also had a $3 billion Polaris Forge 2 campus in September. And then they had another $7 billion deal they signed with CoreWeave, which was later increased to $11 billion. Okay, so once they did that, they basically came in with increased revenues, and they just finally came in. It's not even showing up. It's so fresh. Maybe if I refresh the page, let's see. Last one is the August earnings. Nope, still not even showing up on the financials for Google at least. But they came in with revenues of 126 million. So big surge, and their balance sheet is growing. So they're looking very good financially. So what does that mean? 15 billion in the pipeline, 100 million a quarter with over $1 billion in equity. If they've got 15 billion in the pipeline, current market cap's at 10.95 billion. What does that mean? A lot of companies will become a greater market cap than that of their pipeline. It's quite common. So in that instance, you'd probably see them, let's say they match or slightly increase the value of their pipeline. That's about a $15 billion market cap. In that instance, you're looking at what would be, 50% increase from here, which would essentially price them in around, $50 to $55 a share. That's a very large increase, $55 a share again, and it would be an extreme breakout. But just looking at this progression, kind of looking at this company and how the volatility has spiked and what they've had going on, having caution in the short term is key. Long term looks quite good. That's the story with APLD. Now, when we look at the projections, 62% over the next year, up into that $63 price point once again. This is with Prophecy AI, so kind of just reaffirming what we went over. That wasn't intentional, but it really did line up. And if we look at the insider trading, this is where I'd like to actually have a look here. Let me see if I can drop in some top transactors and see what's going on here. Let's see what's going on here. So let's get the Claude analysis. And while that's loading up, you could see they blew out their earnings. Quarter 2 earnings should not mislead us. You could see staggering 250% revenue increase, translating to approximately 15 million in Q2 revenue. However, despite the impressive growth, the ongoing losses, potential dilution risks could raise some red flags for investors. So they're actually saying, hey, revenue increased. Watch out though, they might come in with more dilution, things like that. It is a risk. I think they've established more trust than most companies. They actually did the Q&A on the earnings call. They haven't really gone against what they said. In fact, they had more integrity than any other companies I've seen that have converted from Bitcoin miners to AI miners, because when they had their earnings, they simply had integrity. They said, these are the deals in the pipeline. These are the deals in the pipeline. However, here we got some other contracts. Those look big, but it's not done until it's done. It's not in the bank account until it's inked, until it's delivered. And I really like that they say that, and they're not just like, because they have this disclaimer at the beginning about forward-looking statements, they're like, yeah, this is like, we're really powerful in this, and it's looking great. No, they were honest, and they were how someone should be when conducting business. And so I like the company. I think they're growing. You could see the insider buys 246 versus sells 308 institutional buys. When we look at some of the data, they've got more increased positions than decreased positions. So bullish on the BlackRock, Vanguard, State Street type of buys and sells. However, some of the later data does indicate they've had some sells on the insider side, more sells than buys, which is a slight, thing to watch out for. However, last purchase was from the CEO, buying a considerable amount of shares, about 6 million shares from the CEO recently in January, just about 7 days ago. So that's pretty bullish there, as the CEO is looking bullish on the stock. They continue to surge after that. Now, when it comes down to the focus for APLD, long term, I'm holding. They're a little overbought. You can see that overbought on the short term. It's not that they won't continue up, but it does have that risk in the short term for those short term pullbacks. So keep that in mind. The long term looks good. Continue to hold it. As we mentioned, some of those projections look quite amazing, up to 62% according to Claude when paired with the same analysis that we do. So we go over the market and we went over the technicals, the news, the risks, all that. We're going to do the same thing really quick for number 2. Number 2 is IREN. IREN. This stock, we were also projecting to make a run up to that $50 price point or $55 price point. And just look at this. It's making its way. This one was a little different. APLD, we thought it was going to take months. This one we thought was going to happen in a day, but it made a big chunk of it in about 3 days. Wow, look at that surge as it continues to roar up. You see this kind of uptrend here starting back in December, and they're up to $50 a share. They're currently in the same position as APLD. They've had more revenue, and they've increased their revenue not only up to 240 million, but a positive net income as well. Balance sheet's growing. They got 3 billion in assets, and their market cap is just about just a measly $4 billion higher than APLD, but their revenues and net income is about 3 to 4 times greater than that of APLD. So we know APLD was working with CoreWeave. This company, IREN, is kind of like a top data center long-term company you'd want to be watching. They have pulled back considerably from that $76 price point, and they're down to about $45. Now, if we see them get up to that $76 level, you're looking at about a 50 to 60% increase from here. Now, if they do come in with the same type of earnings they came in with last quarter, they continue to grow and get the triple-digit revenue growth here in their AI data center business. That's a 355% increase. they're going to see that number continue to grow. They're probably between a 20 to 25 billion dollar company. You'd say, wow, that's 20 to 25 billion. That's not small. They're starting to get up there. Well, they've signed some large deals. In fact, if they're currently just at about 14.66 billion, it wasn't long ago they signed a $9.7 billion AI cloud contract with Microsoft. So this is a very large contract, 9.7 billion, including 20% in prepayment. So prepayment, they might come out with, if 20% is getting prepaid, so 10%, 970 million times 2, right? 8, what is that? 1900 or $1.94 billion in prepayment coming out, which if they got some positive net income, I don't want to confuse anyone, but basically their financials increased to net income 384 million. They potentially have another 1.4 billion dollars coming in prepayments alone to their financial income statement. So if they come in, let's say over the course of 2 quarters, and Microsoft, they're just paying it. They're paying it so they could get the AI cloud infrastructure, the prepayment. If you see over the next 2 quarters, 3 quarters, or even 4 quarters, an additional $1.4 billion as what's anticipated here, according to this 20% repayment, we're going to see their market cap. You're going to see revenues of a couple $100 million more in net income, and the market cap most likely is going to see a reflection of that up to about 20 billion. And so these are really bullish outlooks. And I'm not normally bullish, but hey, this it's not here to be bullish, not here to be bearish. I'm just here to tell you, look at this. You got the 9.7 billion, then you got another agreement with Dell Technologies for the purchase of GPUs and auxiliary equipment, approximately 5.8 billion. So this deal of 9.7 billion, it's possible it actually comes out to less though. So if they are paying 9.7 billion or getting paid 9.7 billion, but they're going to pay 5.8 billion to go acquire some GPUs, then this contract might actually be less than anticipated. So we'll kind of see how it plays out. We'll see, if maybe that prepayment is going to be very large or what have you. But currently, with their current backlogs and everything, it seems like they're about a $15 billion stock. So again, kind of anticipating that surge up and stabilization around this $50 range, which they've jumped up to. And then the longer term, if they continue to grow in the earnings as they have, to that $60 to $65 to $70 level. But again, do watch as they're kind of overbought in the moment. They might even see some pullbacks. And it'd be worth taking a look at Prophecy AI to get another look at what things look like. You see that the institutions have been buying. Okay, so we do have some more buys from Hood River. You got Citi, Goldman Sachs purchasing, and there's been slightly more sells than buys on the institutional side, but on the insider side, there's been more buys than sells as the CEO has been buying, the directors have been buying, and some others. As far as sells on the insiders, they've been selling as well, but more recently, sells as opposed to earlier they were buying. So maybe they're anticipating, that actually just happened in this last sell-off in November when they last sold. So in the short term, INEN will have some more volatility similar to what we saw with APLD. However, when you're looking at the projections, for example, when we're looking at these projections from Prophecy AI, you can see some of the projections here into the next month looking like about a 6 to 7 or 8% gain. This is not super normal, but this year, in the last year, we've had unprecedented opportunities in the AI markets. We're seeing, again, an 8.5% increase potential over the next month. I think, when we're looking at the short term, you do see some corrections that are actually looking to take place here on INEN in the short term. But in the longer term timeframes, get into those 3-month timeframes to 1-year timeframes, you're looking at the target of $68 a share. So again, they could sell down to that 50, even as low as $40 a share. as that's their nearest support level, I believe. Let's see. Yep, $50 a share is going to be their nearest support, with a secondary support at 47.90 there, according to Claude. And when we're looking at the nearest levels, those are what you want to watch. Long term, I like the company will continue to hold it. Short term, we're looking for an entry here as they're up 10% today. Maybe we'll look for a little more red before entering. So that's number 2. Now, the key to building and growing your portfolio is having AI do analysis for you as well, if you want to stay up to date, because I'm giving you number 3 here, but ultimately there's like 20 stocks on this list, and there's also a lot of movements, 20 different things that are happening with each stock. And so if you want to use AI to stay ahead of the game, you could use Prophecy AI just like this. Build your watch list, get the analysis, and get the tools you need to see the best insights in the world from the best models in the world. And I say that confidently. I mean, if we're able to gain over 100% in the last year, those are some of the best returns you could see in the world in the stock market. And we've also taken that same analysis approach, put it into the Prophecy AI for you, and it does all of the analysis for you. So you just wake up to deals. It's the first link in the description below. Go have a look. When it comes to the third stock we're covering here, it's going to be CLSK. Now, CLSK has sold down tremendously from levels of around $23 a share. And we saw it, get some momentum into this year from about $6 a share up to $23 a share. And this company is in a similar position that they were, back when they started to make this run, either here in June of 2025 or here in September of 2025, before they surged into late of the year up to $23 a share or up to, $13 a share. So they're currently down around $11, and they are doing this very kind of consistent pattern they oftentimes do. So they have this movement where a lot of times they start to surge and then consolidate and then determine their direction. Sometimes that consolidation, that left to right kind of movement, you can kind of see that level here, the support and resistance here. You guys see that? It's like a plateau, right? It's kind of a reversal. So they went up one direction, consolidated, and then sold back down. And the same thing is true for right now. You see them surge from $9.98. They're now up to this $12 range, and they're now again consolidating from left to right. Now, last we analyzed them here, we're looking for about a 4% bounce on this support line. They did end up bouncing actually that 4%, but we are looking for a larger trend, seeing them get up into that 1250, which would be from current prices about another 5% gain. But that longer term trend, really what I'd like to see is something like this, up into this $15 range, which is a 31% increase. But before then, just making sure they hold above that 1150. There seems to be a support there, and we can also verify. Let's search up CLSK in here. So yeah, okay, so 1156 is the support level, with the secondary around 1059 according to Prophecy AI. So again, so that's this support right here. You kind of see this, see that 1156 would be right here. Okay. And then if they don't hold this level, then you're looking 1069 potential. So they're kind of accounting for this consolidation here, that kind of support level is acting as a resistance right here around that 1060, 1080, right in here. Oh, it seems to be that it was also back around this level as well. Be right in here. Yeah. So kind of a key zone, but really just watching that they hold above this 1150 up to 1250 and beyond. So I'm actually anticipating CLSK to have some good moves. So let me talk to you really quick about their financials. So the financials on this company, CleanSpark, they came in with a revenue of $220 million last quarter, which was up 150%. So they've had a hockey stick growth of revenue, over 100% a year and growing up to 150% this last year, with net income also improving. Their balance sheet is up to 3.18 billion, so over $2 billion in equity, and liabilities are much smaller, that orange down there, much smaller there than their assets. So financials look really healthy, and they're doing, again, if they're doing about 200 million of revenue per quarter, their current market cap's at only 3 billion. Now, what's interesting about this company and why, I put them at number 3 is because it seems that they're slightly more on the investor side. So they're optimizing megawatts to support digital world. They've pivoted recently towards from Bitcoin mining to more of the AI data centers. And this is the right market to be in today's world. You can see some of their data centers here. You got the different locations that they're investing in. They entered the Texas market with land and large-scale power acquisitions to rapidly deploy AI data centers in Greater Houston. They're also building some data centers in other areas in North America. As one of their recent articles specifies, that they are building data centers, operating AI-focused campuses while Submer, okay, this is another company they're working with potentially, will offer its technology in sustainable modular data center systems. So from a financial perspective, again, they're growing. They're at 3 billion in market cap. From a news perspective, or what they've come out with on a press release, you can see that they came out with better earnings recently, and that they are not only raising money but deploying these AI data centers. Now, as far as contract values, haven't really seen a lot of contract values tied to some of these recent deployments, which makes it unsure about how their next quarter is going to be. While they came in with more revenue and the revenue is increasing, it looks very consistent. It's been very volatile on their net income. One net income is up 246 million. The next quarter, it's down 138 million in net income. While the revenue stayed steady, that net income means that they're, spending a lot, and then they're, not spending anything. And it's very volatile there right now on the net income. So I'd like to see how they come in with this next quarter before entering more long-term positions. But seeing that they've been around for a pretty good amount of time, they're building the data centers, and they're down around this $12 price point with potentials to get up to $15 or even up to $20. You're looking at potential 30 to 100% increase if they just hold above their current levels, continue some of their business developments. So there you have it. The top 3 companies we're watching. I don't have any trades in this one, but I do like their company. That's why they're on the list. And hopefully you guys enjoyed. Another trade that I will put in as an honorable mention here was TSSI. TSSI is doing all of the configuration of the data centers, like the wiring, all that stuff that's really kind of a headache for big tech to even think about. Like they think, oh, let's just spring up a data center. Somebody's got to do all the wiring. Somebody's got to do the modular edge services or set up those computation solutions inside of the data centers. And so TSSI does that. I really like their financials. I won't get in too deep, but anyway, we bottom down here. We're looking for them to increase up to about 46% gain, up to $12. We got a modest 500 shares there, nothing too crazy. So we're trading it. I do think it's possible that this company could also be in the levels of up to around $20 to $25, or even as high as 31 that we saw back in 2025, which would be a 200% to 300% potential increase. So again, still in it, and we are trading it. If you guys ever want to see our entries, see our exits, how we trade, how we find the top companies to invest in, then I would encourage you to have a look at the second link in the description below. That's going to be Stockmate. You get our targets, you get my entries, my exits, Monday through Friday, right at market open. It's early in the morning. It's still dark out in the Pacific Coast, but it's all right in the East Coast, still daily or daytime. But if you want to tune on in, I would encourage you, have a look. Second link below. We're there Monday through Friday. You get access in the second link. And also, you get a free t-shirt when you join. Now, if you're thinking about Stockmate, you might as well go grab Prophecy AI while you're at it. That's going to be the first link below that includes Stockmate for free as a bonus. You get a 1-year access, all the models, paired with my analysis for Grok, OpenAI, Claude, and Gemini. If you want to go get these models on your own at the level at which we offer them, it would cost you around $1,000 a month. You would pay basically a fraction of that for the entire year of 2026. If you want to get on the right track, go be a part of beta. Share with me your insights. Share with me what you like, what you don't like about the platform, and let's get it to the top shape it needs to be for the scale of our company. And also, that's all I ask, your feedback, and you get to use the same systems I'm using in this market right now. Again, it's the first link below. If I earned your thumbs up, hit the like button. Do consider subscribing, and I'll see you in the next one. Take care.